Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us is Randy Tate. He's the CEO of iFlip Invest. We're going to talk about using artificial intelligence to invest in retirement accounts. And Randy, saving for retirement or investing in the stock market used to mean relying on someone else to manage your money. For most, the investment decision has meant smaller gains and higher fees that result in later retirement dates and sharper losses. But let's talk about the millions of Americans that are looking to cut out investment banks from managing their money by using a breakthrough in AI technology. So Randy, let's start our conversation with the problem your AI technology is trying to solve. Your company talks about replacing investment experts with AI. What's the problem with hiring an expert to manage your money?
This is actually a twofold problem that comes down to fees and risk. Right? That's the two problems. So risk first. I have no problem with experts managing money, but if you can find one, I dare to say 85% of the experts are not able to beat the S&P 500. They can't even beat that. So if you can't beat that, why not just go get an E-Trade account, put your money in there and leave it alone? Simple ETF. And that includes advisory investment firms. And just the rare person that is a true expert that can manage it, they're in high positions at big institutions. Number two is fees. Management fees for investing can be anywhere from 0.5% to 1%. This doesn't seem like a lot, but NerdWallet published a study last year showing that a 1% fee could cost millennials up to $590,000 in retirement savings. That's because people are paying percentage fees. This means as a retirement account grows, the 1% fee will keep growing in dollar amount, even if there's no extra work. That ever increasing fee then takes away from the potential gains that could have been accrued with the compounding interest. The compounding effect works both ways, forward and backwards. These seemingly small fees end up costing hundreds of thousands of dollars. Our AI technology solves both risk and fees. We like to think of we're doing this more efficiently and more effectively.
And how does iFlip take the risk out of investing in the stock market?
Well, there's no such thing as zero risk. That's just that doesn't exist. If I find that one, I'll let you know next. But what we do is we use mathematical algorithms to hedge people's money out of the market when the mathematics determine it is statistically likely that the price will go down. This allows the customers to avoid big dips like 2008 or even our recent 2020 crash, where most people found they lost between 20 and 30% on their investments. And you can see the results. Our AI smartfolios managed to come out of this entire 2020 crash with positive growth during this entire crash period.
Well, let's get into AI a little bit more. How does the artificial intelligence make decisions to trade?
Got it. The AI is there to manage risk. That's its job, which means it is analyzing the market and predicting the likelihood of positions to go up or down. The software then buys or sells the stocks or ETFs automatically. Many say it's impossible to time the market perfectly. And I agree with that. To perfectly time it, not really possible. But because there's no way to know exactly when a crash is going to happen. But that doesn't mean we sit and lose our money when the market is crashing. Why ride through that? The AI uses statistics and mathematics to create smart decisions that carry out the trades for the user. Our AI in the 2020 crash sold months before, November 19, and ended up dodging the crash in February of 2020. The AI bought back in as the market started to recover for gains. AI gives us the ability to preserve, protect, and grow the wealth of our clients, giving us a leg up on index funds, investment managers, and people that ride the ups and downs of the market. And I'll say this, AI is a bit of a buzz term. A lot of people think that a simple algorithm is AI. There are robo traders out there that coin themselves as AI. As far as we know, AI outside of our platform doesn't exist in this arena. One simple question you can ask: does the algorithm, does the machine have the ability to change its own rules, or does a person have to go in and change the rules to get the machine to perform differently. In our particular case, all 11 algorithms have multiple algorithms behind them that are adjusting the data, allowing the algorithms to change their own rules, machine learning.
iFlip has recently become a subscriber to Nasdaq Basic via the newly launched Nasdaq Cloud Data Service. How has this helped you succeed in the AI trading space?
Good question. Our platform relies on giving people the ability to see market data, stock prices, and company information. We were able to do this with our previous provider, but found that our customers needed faster and real-time data. Nasdaq's Cloud Data Service helped us create a much more stable backend, allowing us to get real-time pricing data directly to our customers in like it says, real time. It has really taken our platform to the next level. We are extremely grateful. Thank you, Nasdaq.
I could see why the iFlip's AI performance can beat out regular investors. Tell us more how it's cheaper. How does iFlip charge fees compared to investment managers?
Currently, investment managers charge a percentage fees for their service, which means the more you invest, the more fees that you will pay. Charging fees out of a growing account, in effect, delevers and creates a compounding loss for people. This makes it harder for retirement and investment accounts to grow over time. Our subscription model allows anyone to download our app and start investing using the AI for free. Now, it would be impossible for us to do our service completely for free always, right? But when the account hits certain amounts, we'll charge a flat monthly fee, starting as little as $10. And that will increase only at 3 points in the future. At 50 grand of investment or $77 a month from us, that's the cap. It'll never go over that. So if you have a couple $1,000,000 in an IRA account on our platform, it's only going to be $77 a month. So as the accounts grow, we want the value to grow as well. This guarantees the person will not be charged higher fees as they grow. This may seem like a small savings, but we're talking hundreds of thousands of dollars in savings over the life of the account. And our clients then use that money to invest for increased compound returns. We also give them the option, if they want to pay the fee on a credit card, they can do that as well, to completely take nothing out of the investment account. This is unheard of in this investment space.
All right. And Randy, what does the future hold for iFlip?
We have a very large BHAG. You know, for those who don't know Jim Collins or the terminology around him, stands for Big, Hairy, Audacious Goal. We recently launched our app in early 2020, January 22nd to be precise. We want to have 3 million customers on our platform by the end of 2021, and we're well on our way to that goal. This will allow us to change the lives of millions of Americans looking to retire and seeking just a better future for themselves.
All right, Randy, thank you so much for joining us on Trade Talks.
Thank you.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.